Hello everyone, and welcome to this episode of Investing and Trading Live. As always, my name is Josh Lilquist, and it is a beautiful Friday morning here. Pre-market, we have the markets chugging along overnight, and the market is continuing to plummet here today. We're going to discuss some of those drops here, some of the volatility and potential reasons why, and which is just news if you think about it. And we'll talk about where the market could be opening up here, since it is 7:12 in Mountain Time here today. Market opens in about 17 minutes. So we'll cover that stuff here today. We're going to also get into some of the common mistakes novice investors and traders make when making their financial decisions, whether it's getting into a trader investment or getting out, and not really having the proper capital management set in place before they get into that. But before we do that, as we know in the headline, there should be roughly around $2.2 billion in stock options expiring here. And that's supposed to be bringing some volatility. That's according to Market Watch today. Now, could it bring volatility? Yes, it's possible, but every single day we will have volatility, which is a great thing in the financial markets. So is that a bit of news or clickbait to get people to click that link and read the article? It's a potential, but also is it an opportunity for investors to gain some fear or greed in the market? You can take that information and get your own opinion on it, and that's really what it is. It's just an opinion on what you think the market might do because of that. So that being said, make your decisions and place your investments and trades based off of facts, which is the price charts. Price charts do not lie. That's basically telling you price within a certain amount of time, and there's candlesticks on there. And each candlestick represents that price within a certain amount of time. It can be an hourly candle, weekly candle, monthly candle, 4 hour, daily. It doesn't really matter. Whatever your style is in trading and investing, that is dictated by that chart time frame that you use. So make sure to do that in your trades and investments. So S&P 500, looking at the ES here for the S&P 500, that's the futures market, is currently down about $23 on the day. Now going into the open, we always look at the S&P 500, which is the SPY. That's going to open up here about $2.15 low. It's going to gap down here again. So stocks really continuing to plummet with the S&P 500. Should be opening up right around 430, 420, depending on what the market does here the next 16 minutes here. So markets continue to drop here today and really dropping off those highs. And we had talked about a supply zone about a week and a half ago, I want to say, with Luke on the show, that he was short some options. By the way, there's risk in trading and investing. There's no investment advice here, strictly for entertainment purposes only, mainly mine, but hopefully you find this entertaining as well. So that being said, we were talking about that supply zone he was in and continuing to drop on that off of that supply zone. We will get him back on the show next week, and we'll have him talk about that trade or investment. He said it was in management mode at the time of the trade. I think he was in for probably 3, 4, 5, 6 days already. So we'll talk about that. We'll get him back on the show here. We also need to get Al back on the show as well, so we'll do that. So that is the S&P 500 looking to gap lower and continuing to drop on the day. Let's look at a couple notable stocks that could be potentially showing a big drop here. Actually, matter of fact, let's go to the biggest movers right now. Neptune Wellness Solutions is up about 70%. There's no household names here on the gainers. Let's see if there is some losers that could be bringing some volatility. Nothing as far as a household name that's showing anything, but Farfetch Ltd, whatever that is, ticker symbol FTCH, down about 41%. So that market not looking too hot if you're long. Ross Stores up about 5.70, about $5.70. That's we call that a household name, depending on what part of the country you're in. Key losers, no major household names. Let's get into the news here. And I'm just using a news app here for looking at some news. And what's in the news can sometimes give you clues. So let's look at that and see if there's opportunities with any of these stocks. So Yellow gets a $1.3 billion acquisition offer for the shipment centers. That was 2 minutes ago. 11 communication service stocks moving in Friday's pre-market session. So if you're looking at communication stocks, they say they're moving. Uber is still a 100% buy. We talked about that. I believe that was the beginning of the week. Alibaba is still a 100% buy based off of this analyst rating. And who is this analyst? I have no clue, but that being said, it is an analyst. So Friday's earnings here today. John Deere reporting as far as a household name. Before market open up, they may have reported already, I'm not sure. And Monday, as far as household names reporting, nothing as far as a household name that I'm looking at here as I'm looking at the session here today. So going back to the markets, so that is your news updates for the day. Going back to the markets, S&P 500 is opening down. The 30-year bond is up about 12 ticks on the day. And in the futures market, for those of you that are new to the futures market, they are bought and sold, and they are priced in ticks. Not, as you know, the stock market is priced in shares. You want to buy a stock, you buy 5 shares, 100 shares, 5,000 shares, whatever that may be. In the futures market, you buy contracts, and each contract is priced in ticks or points. So so many ticks usually put together a point. For example, the S&P 500, 4 ticks is 1 point in the S&P 500. So that being said, the 30-year bond down up about 12 ticks on the day. Each tick on the 30-year bond is $31.25, I believe, on the 30-year bond. So looking at some major stocks here, let's see. Apple is going to be opening down on the day about $1.40, which isn't going to be much as a percentage, but yet then again it is going to be down. US dollar is up 19 cents on the day, so you probably will see that continuation of a inverse correlation with the US dollar and the major stock markets. So if that dollar continues to go up, which, matter of fact, let's look at that. US dollar continuing to go up off the lows from July. So really showing some strength past a couple demand zones here, past a couple pivots on the highs. The next pivot is going to be 104.50. I talked about on the show, I believe Tuesday or Wednesday. I'm looking at 105 as the next target for the dollar. So this can really continue to go up here as markets continue to show strength in the dollar currency, which will continue to most likely drop the equities. Coinbase down about $3.71 before the open. Tesla going to be opening down about $4.32. Ford 9 cents. XLE 37 cents. I believe XLE was up big yesterday. Disney down 42 cents. And Nordstrom's, we talked about that yesterday. We're going to look at some options on that. If there's any notable options with Nordstrom's, I know it's a terrible stock to look at, but might be giving some premium here today. We will look at that and see if that's an opportunity. But boy, with this market really cratering, does it make sense to have a bullish strategy? Probably not, but we'll look at it anyways and see what it says and let the price chart tell us what we should be doing. So that being said, that's your overall market update. Most of the stocks can be gapping down here today. Probably continuation on this downtrend, but we'll see as the market opens and see what the volatility brings. That being said, I want to talk a little bit about managing risk. So basically, managing risk is knowing what you're going to be wrong, as far as the dollar amount, what you're going to be right in that same position, and that's how you calculate your risk. And one of the key factors in risk management is having the proper win to loss or win-risk ratio, which means you should hopefully have more gain as far as a dollar amount than in your wins, and a small loss in your losses. So one of the things I like to talk about and preach is at least a 2-to-1 or 3-to-1 win-risk ratio, especially when you get started. That way you don't have to be correct every single time. I was, matter of fact, having a conversation with a family member recently, and we were talking about trading and investing, and we were getting into, they said, yeah, I get into trading. I'm looking to risk. If it goes down 10%, I'll get out. I'm willing to take that. And I said, wow, you're willing to risk 10% of your portfolio to hope something works out. You know that if you have 4 or 5 losing, we'll say 5 losing trades, you lost half your portfolio. How are you going to be able to stomach that? And I don't think they really understood that. So we talked a lot about managing a smaller amount of capital or a smaller percentage per trade. That way, when you're getting in and out of your positions, you have less emotions, fear, and greed in the market. So a good rule of thumb, and this is just rules of thumb, it's not what anybody should be doing. Anybody can make their own decisions here. But a good rule of thumb is 0.5% or 1% per trade. A lot of you may be thinking, boy, that's not very much. How am I going to make any money? Well, if you're looking for longevity in the markets, you have to have small risk and high reward. So if you're wrong, let's take the 1% example. If you're wrong, you lose 1%, and when you're right, you make 3. So therefore, you can be wrong 30% of the time, 35% of the time, and actually be doing fairly well. To bring along longevity in the markets, that's what you really got to do. Banks and institutions, they run the market. They move the market, and they're not right. I don't have exact stats, but they're probably right less than 50% of the time, or right around there. That being said, they have proper capital management, and that's why they're always continually making money in the markets, continuously profitable in the markets. So that's a good rule of thumb. So common pitfalls that people make in their trades and investments in managing their risk. 1, risking too much money. Just taking too much money and hoping things work out, and then they eventually will quit because that risk was just way too much. So that's that. 2, getting out before you get to your profit. So us as human beings, we don't want to be wrong. We don't like to be wrong. So having a strategy that says, okay, if you're wrong, it's small. If you're right, it's much larger. But collecting your profits at those targets, as traders, investors, we want to have profits and gains. And sometimes one of the common pitfalls is people collect their profits too early, and that don't allow them to get that 3-to-1 win-risk ratio, or 4-to-1, whatever their goal is, or 2-to-1. So the more times you do that, that win-risk ratio will start to get lower and lower and lower, to eventually it's hard to be profitable consistently, because you're taking small gains and small losers. Hopefully you're still taking small losers, and you either break and even or lose money because your win-risk ratio is not high enough to sustain that. So 1, risking too much money. 2, collecting profits too early. 3, that third one would be letting those losers that are small get bigger. That is another common mistake. People say, oh, it'll come back. I have a feeling. I have a gut feeling this is going to come back. Well, that is a common pitfall that people make, because if you continue to do that over and over, eventually those losses will get bigger and bigger until you can't stomach the loss anymore, and you finally get out because you can't take it. So keep those losses small, and that's how I end the show every week, and I'll do that here shortly. But keep those losses small, those winners bigger. Follow the markets, follow the trends, and use the price charts to dictate that win-risk ratio. So we'll talk about that more here on the upcoming shows here, but I just want to throw that out there for you. There's your quick market update for the day, and common pitfalls investors make when managing risk, and some of the things you can do to have more longevity in the financial markets. We're going to try to do a market recap today after the market close, since we're going to hopefully have some volatility, some action, and we'll see how far this market does drop here today. So as always, collect your profits when they are given to you. Keep your losses small and close them out when they are small. Boy, I just did not do that one very well. As always, my name is Josh Lilquist. Until next time, retire young, my friends.